What's going on, guys? Welcome back to another CLC trade review video. We're going to hop straight into this one, going over this long setup that we took earlier today from the 733 demand structure. We're going to review this trade contextually, locationally, and from a confirmation perspective, as we always do. And just as a quick note before we hop into the pre-market plan, if you guys are just now joining us in the CLC Foundation series and you're unaware of what the CLC model is and what it represents, obviously you understand the acronym by now, context, location, confirmation, but this model has been devised to ensure that we're operating within the market and taking trades that are only high quality. Through the contextual analysis, we're always identifying the current market conditions that we're operating within before we ever take a trade. Through the locational analysis, we're always predefining our locations of interest, supply and demand zones, before we ever get interested in trading at any sort of area. And through the confirmation analysis, we're looking at order flow to actually validate buying and selling activity at our supply and demand zones so that we can justify our participation within the market to either take the market long or short from our supply and demand zones. So with that being said, let's head over to the pre-market plan and head over the structure, the context, and the plan heading into the open. So very simple. I stated that as long as the inverse volatility index can maintain value within its previous day range, I'm going to focus on potential long opportunities within the demand structure pictured below. So here we can see the inverse volatility index trading within its prior day range. And down here's the demand structure, 7383 demand right here. That was our first area of interest that we were interested in potentially taking the market long at, if context could continue to support longs by trading within the previous day range, and if we could then get order flow confirmation down here to justify our participation. So now heading into the intraday session, let's touch up here on why more in depth we were interested in this setup between ES and VIX. So if you guys are unaware of what mean reversion is within the markets, it's simply a condition where an asset moves below its previous low of day or above its previous high of day, and it fails to auction in that direction. In this example, we can see price moving below its previous low of day and then moving back to the upside within its previous day range. So that's what mean reversion is. And the condition that is going to heavily suggest mean reversion within ES back into its previous day range is when we see ES moving below its previous day range and is not accompanied by a breakout below the previous low of day within the inverse volatility index. So under this condition, this is going to favor mean reversion and a move back to the upside from beneath the previous low of day up into the previous day range. So to speak into this a bit more specifically here, if ES is attempting to move below its previous low of day, but the inverse volatility index is not moving below its previous low of day, then what this is revealing to us is that downside protection, or essentially the demand for puts, is not increasing fast enough within the SPX options chain, which is being measured through the inverse volatility index to support a move underneath the previous low of day within ES. So if the demand for puts are not increasing fast enough, such that the inverse volatility index breaks beneath its previous low of day, while ES is also breaking beneath its previous low of day, then it's very indicative that price may move underneath the previous low of day within ES. However, that move is likely not to sustain, and we will hence move back to the upside. That is what this information reveals to us through the relationship between VIX and ES. So that was the context behind today. And as I said in the pre-market plan, we were interested in potential long opportunities at 7383 demand, which we essentially opened up into. So we have context favoring a potential long side opportunity as long as the inverse VIX can maintain value within its previous day range, as ES trades within this demand zone and more specifically underneath its previous low of day. So next, we have the location. We can see here that price is trading within the 7383 demand structure. We don't need to touch up on this too much. Essentially, we understand that our predefined location of interest is now activating in the market, and we are now trading at this location, where we then move on to step 3, which is to look at the order flow confirmation to actually validate that there are buyers stepping in to justify our participation in the market so that we can have reason and evidence from the tape to take the market long. So now pulling up the delta footprint chart and looking at the order flow confirmation, what I want you guys to see here first is at the 73.80s, this extremely large amount of aggressive market selling volume that's transacting here. So at this location, we can see very large participants getting active in the market. This was acting as a relevant level of structure within the intraday session that I was paying attention to. Essentially, a precondition of mine for a potential long setup was that we were going to have to break above this 73.80 structure right here. So that's just an important piece of information heading into this order flow confirmation. So next, after this transaction at the 80s, we can see price proceed to push lower into this demand zone where we transact very large amounts of aggressive market selling volume. Now, under the condition that there's this large amount of aggressive market selling volume, what would be ideal for these sellers is that they get rewarded for their efforts and price proceeds to push to the downside and we make lower lows and lower highs. However, what I said within the live trading tab, which is available to all private members, was that lots of selling volume transacting down here, and this is setting up to be a trap participant setup. So as I said, sellers should be rewarded for their efforts, and if they are not, and price proceeds to push to the upside, then this is going to set up as a trap participant setup. And so to speak into what I mean here a bit more in depth, under the condition that price rotates back to the upside very aggressively, what we can understand about what's going on in the market and from the perspective of these sellers is that they are now trapped, they are put underwater, and they are essentially forced to cover their positions. When sellers sell their positions, they essentially act as new buyers in the market since they have to since they have to buy their sell positions. And what we can also gather from the potential scenario of price moving back to the upside is that there are passive buyers essentially sitting here and absorbing all of these aggressive market sellers successfully as price then proceeds to push to the upside. So I said that this was heating up. Obviously, I can't enter the market long based off of the information that we have right now. Sellers are in control of the market. And under the condition that price rotates back to the upside, we will understand that these sellers are trapped and that passive buyers are sitting here and successfully absorbing their orders. And so that is going to act as order flow information that is going to favor a long setup, and that is going to allow us to really validate our idea from this demand zone through this information. And so right here, I'm going to replay this data. And what I want you guys to notice is that price is going to move back to the upside very aggressively. Watch the depth of market. When we see the depth of market accelerating very quickly, exhibiting very high velocity back to the upside, what this reveals to us is that there is active participation from buyers to lift the offer or to increase the value of price very aggressively. And so under that condition, we can now understand that buyers are starting to take control of the market. And when we take this information in combination with what we've discussed so far about the passive buyers and these sellers now being trapped, we have information within the market that is really starting to warm up to us as a potential order flow confirmation. And so we can see here price moving about 15 points up to the 85s within about 45 seconds. And so at this point, I understand that these sellers are trapped. I understand that the passive buyers that are sitting here and getting filled while these aggressive market sellers are getting active in the market are now successfully, we can say, defending this price level. So with that information, alongside the information that these aggressive market buyers are now taking control within the market and increasing the value of price very quickly, we can now get interested in a pullback to potentially take the market long under the notion that, again, passive buyers are defending, aggressive market sellers are now trapped underwater, acting as new buying in the market since they have to sell their buy positions, and very large aggressive market buying is stepping in and revealing itself in the market. And so as we can see here, price pulls back into the 82.5s, where a passive buyer then gets active and filled in the market. Price proceeds to defend this level consecutively, where at this point I have enough confirmation to take the market long. We've identified the trap participants at the bottom. We've then identified the very strong initiation move up from aggressive market buyers. Price is now pulling back, and we're seeing passive buyers redefend this location within the market from this demand zone, acting as valid confirmation for us to try this thing long. So I'm long here at about the 84s, risking the 80s down here. And this trade setup worked out in about 5 minutes as price proceeded to push up into our target at 7,400. And so this is how we can use context, location, and confirmation to validate our ideas within the market, how we can take high quality trading setups and approach the market from a structured lens. Every trade always has to have all three elements present. And in doing this, we can ensure that we're operating within the market from a perspective that is high quality.